Gangaraj, who is he's our keynote speaker today, and he has always been generous in sharing with us tax advice, tax inputs, tax strategies, etc. As we are coming close to the year end, Gangaraj and I were talking, and it looked like there are a whole host of tax strategies that our community can benefit from. And we still have at least another 6 weeks before the year ends. So there may be some strategies that you can deploy to reduce your tax burden, etc. So I asked Gangaraj, and he graciously offered to conduct a webinar today on tax strategies, also the new tax laws, etc. So I won't take too much of your time. Will just get into the webinar quickly. But before we do that, I wanted to also share with you that besides Vigyan, and by the way, the word Vigyan, it is all about us sharing knowledge together. And Vigyan also has an Indian word meaning, which means science. So we're not talking about fiction here, we're talking about facts. That's what our goal is in these webinars. So before we jump into that, I have requested Aradhana Asawa, who is the co-founder of Hunger Mitao, which was also extremely busy during pandemic and continues to be busy, to share some updates on what are the latest and greatest on the Hunger Mitao front. What is the need and how has the Indian American community stepped up in our Karma Bhumi to make a difference. Over to you, Aradhana Anasawa.
Thank you, Raj. Thank you for joining all of you. So the Indian American community through the Hunger Mitao movement, and if you do not know what the Hunger Mitao movement is, you need to know. So please do connect with us. It's a volunteer-driven movement, just trying to make sure that nobody around us goes hungry. And we do that by ensuring that all of us, people from India, it's mostly an India-based volunteer movement. We understand that there is hunger here in our Karma Bhumi, like Raj said, and we can support the food banks so they can ensure that everybody has access to food. In the 7 years since the launch of Hunger Mitao, this movement has collectively enabled 70 million meals, 70 million meals for the Feeding America network of food banks. Let me bring it closer to home. For the North Texas Food Bank alone, in the 7 years, we've enabled upwards of 20 million meals. It's incredible. However, it's puzzling that all of this impact has been created by less than 1,000 people, fewer than 1,000 people. And that is puzzling because in North Texas alone, or in the DFW area, we have almost 400,000 people of Indian origin. So please get involved, volunteer, donate, however you want to get involved. If you're interested in learning more about Hunger Mitao or want to join this movement, please just drop your name and Hunger Mitao in the chat box, and we'll make sure that we get back with you. The need now is higher than it was during the time of the pandemic. And we all know how expensive everything has become. So you can all understand why people who were already struggling are struggling really, really hard right now. So please, like I said, put your name and Hunger Mitao in the chat, and we will connect with you. Now, coming back to the Vigyan session, I'm very excited about this session because it also gives me tax strategies and also how I can do charitable contributions, etc. Some ground rules. Everybody will stay muted except the speakers. This session is being recorded. Please, all of you, read the disclaimer. We encourage you to be really active in the Q&A session with questions and in the chat box with, just any conversation. But try to put your questions in the Q&A box. The session's recording will be available on the RightTaxMate website. You'll get that information later. So you won't need to furiously scribble down notes or take pictures, etc. With that, I turn it back to Raj. Thank you, Raj.
Thank you, Aradhana. I really appreciate the update on Hunger Mitao. I do want to clarify one thing. When Aradhana mentioned about India, I think she meant to say the Indian American community here, because Hunger Mitao is focused on hunger in America, and we are right now addressing that issue. And we currently have about 9 chapters across the country, 8 chapters, I'm sorry, and the 9th chapter will be launched in the next quarter. But it is the Indian American community that is coming together to declare war against hunger by throwing their support behind Feeding America and their network of food banks. And my hats off to the community for its generosity. But as Aradhana said, I'm going to recap. With 4 million strong Indian diaspora and almost 400,000 of them right here in North Texas, this impact is coming from maybe just 1,000 people. Something is missing here. Folks, everybody needs to be on this train to make a difference in our Karma Bhumi, our children's Janma Bhumi. With that, enough of Hunger Mitao. Now let's jump right into WeGyan. And it gives me great pleasure to introduce to you my friend Gangaraj. I met him about 6 years ago. He does Aradhana and my taxes and my business taxes, etc. And I'll be candid with you folks. I have had tax preparer before, and I always felt that although I'm paying them, but it was always intimidating. It was not a fun experience. But with Gangaraj and his team, the culture of that organization is such amazing. They are so patient. They are always open to listening. They respond to you promptly, and they are very, very knowledgeable about this subject matter. In fact, Gangaraj, I won't take too much of your time, but because I want to get into the meat of the session. If I'm not mistaken, you have a slide that provides a little overview about your background. So I won't duplicate that effort. I'll jump right in there and I turn it over to you. And please get started. And we are all ears to hear about how we can save some money.
Sir, thank you, Raj. Thank you, Anna, for the kind introduction. Also, thank you for organizing this webinar for RightTaxMate. Before I start, am I audible? Is all okay?
Yep.
Can Raj and somebody can confirm?
Yes, you are all
Okay.
set. Everything. Yeah.
Thank you. So just to begin with the disclaimer, we will have 1 hour time. We are going to cover a lot of tax topic today. Some of them are tax planning strategies. As a standard disclaimer, this is purely for educational purpose. If you want to know more about any of the strategies we are discussing, please do contact us. And we don't want any of you to solely depend on today's presentation and to make any mistakes on the tax return. Coming back to my background, I started my career with Ernst & Young. I'm an IRS enrolled agent. We do represent client with any IRS examination. RightTaxMate started in the year 2018. Overall, we have almost 19 years of experience in US tax. I'll not spend too much time here. We have short of time. I want to utilize this time more for the education that we want to give it today. And coming back to our credentials, we have 75 professionals of CPAs, EAs, and tax associates. We are currently serving all 52 states. We do have physical presence in Katy, Sugarland, Cypress, Irving, Seattle, and Chicago. If anybody wants to meet our representative, you can set up a time. We can meet in person. Having said that, we also equipped to operate remotely. Many of our client, more than 85% of our client gets their tax return done remotely. You can contact us. We will serve you at your need. Coming back to the technology, we are inspired by Big Four. I myself and many of our colleagues worked in Big Four. We do have experience. We want to provide a Big Four experience for our client. We are primarily focused on tax return preparation for personal and business owners. Also do bookkeeping, payroll, accounting services. If anybody need CFO services, we do have a setup. We can help you a one-stop solution for all your needs. Coming back to the agenda, today we are going to cover 2024 tax law changes, year-end tax planning strategies. We also talk a little bit about AI trend and impact on the tax industry. And at the end, we'll talk about, if time permits, we'll talk about FBAR, and we'll open the floor for question and answer.
Well, this is wonderful, Gangaraj. But I tell you one thing, as I was talking to several of my colleagues who have signed up for today's webinar, one thing that's on everybody's mind is the recent election and the new administration that's coming in. So if it's okay with you, I would request you to maybe kick off the session by sharing with us from your perspective, what impact will the new Trump administration have, especially from tax perspective?
So Raj, it's funny. This is one of the hot topic. Many of our clients have asked for these questions already. I have put together a slide to discuss about, from the tax point of view, the proposal made by Trump before that election. Let me go through it, then I'll talk about other strategies after this seminar. Most of you are aware that TCJA was rolled out in 2017 when Trump came into administration. Mainly TCJA for a common taxpayer, they reduced the personal tax bracket from 39% to 37%. They increased the standard deduction. They almost made it double. And also the estate tax exemption has been increased in 2007. And all these provisions set to expire. It was pre-planned on December 31st of 2025. But when Donald Trump was doing the campaign, he promised that he'll make it permanent. That means this is not going to expire. This is a huge change. Many of the taxpayers do get benefit of getting the lower tax bracket, increased standard deduction, and also mainly the estate planning brackets are significantly high. And for a business owner, a lot of incentive are given. One is the 20% pass-through deduction. If you have an LLC, S Corp, you do get the 20% QBID deduction. So that is another standard deduction for the business owner. So we are expecting to receive more update, and we hope that from the benefit point of view, this will be extended in the coming years. Also, the corporate tax currently is 21%. There is a talks about decreasing the corporate tax from 21% to 15%. This opens up a lot of opportunities for the business owner. Another benefit is about excluding the social security benefit. Currently, portion of the social security benefit is taxable. You need to pay taxes based on your other overall income. There is a talks about completely excluding the social security benefit. Tips overtime. Normally, if somebody works in a restaurant or any other industry, if you get overtime or tips, it will be exempt from taxes. Currently, there is no benefit for auto loan interest deduction. So this might come into effect. And also to encourage the domestic production, there will be a 20% universal tariff on imports, and also there will be a 50% tariff on imports from China. So these were the proposal made, and we need to see what extent this will be implemented, and we will get to know very soon. Okay, so let me get back to the main topic for today's webinar. I'll start with the 2024 tax law changes. This slide is extremely important that at this point of time, most of you fall under married filing joint. I have highlighted in gray. So you need to start thinking about what would be your income and what would be the tax you need to pay. Most of you are aware that the tax will be calculated on the progressive tax rate. If you are filing a married filing joint return, and if your income is anywhere between 200K to 383K, you will be paying on that income of 24%. Anything over and above 383,900 will be taxed at 32%. So if you can able to bring your tax bracket to 24% by adopting some of the strategies, I'm going to talk about it in the coming slide. So you will be saving 32%. If you can able to reduce your taxable income by $10,000, you will be saving $3,200 in taxes. That's significant impact on your tax return. It is the time for you to start thinking about it. Look your YTD or year-to-date income. looking your payslip or your profit and loss account, see how much is your income, what bracket you come, and accordingly update or implement the strategies that would help you to save taxes significantly. So if you need any further information, how to utilize, how to reduce the taxes, we can talk about it after this webinar, or send us an email. We'll discuss in detail.
I'm going to jump in here for a second. There is this one service that RightTaxMate offers, which is they will do a simulated tax return. What do you call that thing, Gangaraj?
Yeah, preview tax return. So before, why we collect YTD information, a copy of your payslip that will have YTD salaries. If you work for 2 companies, we do collect all the payslips, the latest payslip. We estimate your taxes based on the information you provide. We will prepare the return, a preview tax return. Instead of working on the return after the year end, you may, if there are any strategies, you may not able to utilize some of the strategies if you come to us after December 31st. Whereas if you start the preview tax return process right now, we can calculate your return. We will provide you in a report format what would be your income, what would be the tax you need to pay, and also we'll identify the potential tax strategies that can be implemented in the next 1.5 months. So this is a great service. Many of our clients have utilized this service, and they are able to save thousands of dollars in taxes. I request everybody to take it serious. We just have small percentage of taxpayers are proactively coming forward and taking this service. If anybody interested, I think you should contact us to initiate the process.
And what is the cost of this service, Gangaraj?
It depends on that effort. If it is we're just providing the information, if it is extremely simple, basic, we are not charging them. If anything additional effort we need to make, we will give the proposal. Most of them they can provide. And we will evaluate based on that effort, based on the strategy that needs to be implemented. We will provide a code for providing the preview tax return.
All right, thank you.
If you are not adding any value, if somebody have only W2, nothing else, sometimes we may not able to provide a solutions that would significantly decrease their taxes. So that time we may not charge a fee. Even with W2, we will come up with 2 strategies that would reduce, and for implementation of strategy, we propose a fee.
All right, let's move on. Good.
Okay, so let's talk about major 2024 tax law changes. First is about filing the beneficial owner information. This is something new. This was introduced for 2024. Mainly, if anybody have an LLC, corporation, or partnership, if you have registered, if you are operating these entities in the prior years, you do have time to file your BOI report, beneficial owner information report, by 31st of December 2024. Not too far away. It's going to be approaching very soon. But if anybody is starting that entity this year, after January 1st of 2024, all new entities, the BOA needs to be filed within 2.5 months, within 90 days of registering the entity. So if not filing this BOA report, will leads to a penalty. One is $500 penalty per day will be calculated for late filing of BOA report. And also, if anybody are willfully not filing this BOA report, they may subject to criminal prosecution, because this is coming from US Treasury, or minimum $10,000 penalty will be applicable. This is extremely severe, important, and we provide very basic information. We need to provide who are the owner, who are the beneficial owner of the entity. Please do contact us to file this BOA report. Or if you want to file by yourself, go to US Treasury website. You can submit this BOA report by yourself. We will charge $150 for getting this done, but anybody wants to do it on your own, but ensure you file an accurate, not making any mistake while filing this. This is a one-time activity, and whenever there is a change in the owner's information, you may need to update it. Otherwise, it's a one-time activity. So please do take care of this filing, or please do contact us. We are happy to help you file this BOA report for all of our clients. The next major update about withdrawal from the retirement account. If anybody have 401k account or any of your retirement account, for selected reason, you can able to withdraw without paying any penalty. Please note, this will only save penalty, not the tax. You may still need to pay for the withdrawal on the income tax, but the additional 10% penalty will be eliminated or saved. For a financial emergency, it's a broad category. It's just $1,000. You can withdraw up to $1,000 for financial emergency, and you don't need to pay for the penalty. If any of the taxpayer have a terminal illness where they're expecting death in 7 years, that's called a terminal illness for IRS purpose. So they can withdraw any amount without paying any penalty. Or anybody who are suffering from domestic abuse or in the family, they can withdraw $10,000 without paying penalty. And the next one is about for federal declared disaster. We had storm in Houston, Florida. If IRS declared a federal disaster area, you can withdraw up to $22,000 without paying any penalty. And also, if for any damage, you can claim a casualty loss that is additional, that is separate, that is still there. That you can able to take benefit for any casualty loss if it is federal declared disaster area. If you want to know more about it, please do contact us.
So Gangaraj, this year we have seen a lot of calamities, from hurricane to the largest Texas fire, etc. So if any of those areas, if anybody on this call is from that area or know somebody in that area, they know that they can actually use their funds in IRA and withdraw from there penalty free, as long as your area was impacted by that calamity. Is that correct?
That's correct. IRS already published the federal declared areas in their IRS website. If you want to validate, you can check in the IRS website or contact us. We will validate for you based on the zip code, based on your residential address, and also suggest you all the benefit you have. You can go for SBA loan with 1% interest rate. You can claim the casualty loss. You can use your IRA fund. So there are some benefits that you can claim. So contact us to know more about it.
Right. Gangaraj, I know you have a few more slides, and so I would request you just move a little bit faster. I mean, just only because I want to make sure that everybody sees the wonderful information that you have here. And I will
Sure.
interrupt anymore.
Yeah. Solar credit, 30% of the cost. If you're installing solar equipments, you get credit, including the material, and for that labor, you get 30% credit, solar credit. In addition to that, if you are replacing your AC, heater, you get up to $2,000 home efficient credit. If you're replacing a window, you do get 1,200. You might be hearing a lot of advertisement that your window will be replaced free of cost. This is mainly they're talking about you get the credit. You need to pay to them, but you do get credit from IRS for replacing your home improvements. Also, you do have the electric vehicle credit. Again, it comes with some limitation, income limitation, and the value of the vehicle limitation. For a new vehicle, it's up to $7,500. For the previously used vehicle, it's $4,000. Let's talk about tax planning strategies. These tax planning strategies, can be implemented anytime during the year. Some of them have very limited time to implement, but you should start thinking about it for 2024 or mainly for 2025. One is set up a Roth IRA for kids. This is a great strategy to grow the fund for your kid tax-free, and also give them a good gift for your client. How to set up, how to generate earned income. Due to short of time, I may not able to elaborate more. Even if you are individuals, W-2s, there are some ways to create a active income or salary income for your kid. We can talk about it. Please do contact us. We will educate more. HSA, it has three benefits. The contribution is tax deductible if you are in a high deductible plan. the growth is tax-free. And if you use the HSA for medical expenses, you don't pay taxes on the distribution. Again, some amount, a limited amount to be parked in HSA because of limitation you have on using this fund for any other purpose. 529 plan, again, everybody need education. Some amount based on your plan needs to be kept in 529 because the growth in 529 plan is tax-free. Other topic about charitable giving, ECLAT, especially for net worth individuals. When you make a contribution, you can able to take deduction for the contribution. A portion of it will go to charity and portion of it will grow within the ECLAT, and it will be passed to your next generation tax-free, estate tax-free and income tax-free. This is a great strategy, especially for high net worth individuals. If anybody wants to know more about it, please do contact us. And donor advisory fund, if you have a income and you don't know where to contribute at this point of time, now it is just 1.5 month for 2024. Simply create a donor advisory fund, you park the money, you get the deduction and decide where to contribute later. This is another great strategy. Raj can throw some light because he himself has created a donor advisory fund, and you can talk 2 minutes about donor advisory fund.
I will take 30 seconds. I think it's a great strategy. I think whether it is Fidelity or any of your brokerage, I have my donor advice fund. Anna and I, we have our donor advice fund. I should correct myself at Communities Foundations of Texas. If any of you is interested, we'll be happy to make introduction there. And like Gangaraj said, sometimes, let's say if you want to donate $10,000, whatever number it is, but you're not sure who to give to, but you want to take advantage of the tax deduction this year, you can put the money in the donor advice fund, and it is still your money. You cannot use it for personal reason, but you can take your own time, I think like 3 or 4 years, something like that, to then disperse it to charity of your choice. So that way you don't feel rushed to make a decision in the next month and a half. So I think it's a great strategy. In fact, one of the things I plan to do in a future WeGyan webinar is have experts from Community Foundations of Texas come in and talk about donor advisory funds. Back to you, Gangaraj.
Yes. So thank you, Raj. The next strategy about maximizing, the contribution to 401k plan. You should review your payslip and see whether you are receiving the maximum match from your employer. Also, if you are a business owner, think about contributing more defined benefit plan. The defined benefit plan gives you an opportunity to contribute much higher amount. It's 250k or little more than 250k per participant. If you're husband and wife, you can contribute 500k of more than $500,000 to the defined benefit plan. That is pre-tax. That would reduce your tax liability or taxable income from the business. Again, it comes with certain limitation threshold, but it's worth trying out, understanding, work with your financial planner to reduce your taxable income. And anybody need a referral to the financial planner, you can contact us. Next strategy about trader tax election. If you are a trader, if you are spending significant amount of time in trading, you do have an option to make a trader election. Trader election timeline is you need to make this election within 90 days for the calendar year. For 2024, trader election is expired, but for 2025, it's open. If anybody is spending more time in trading, want to make use of deducting some of the expenses like home office expenses, margin interest, this will be direct deduction from the money you make from trading. Also, if you have any loss from trading, there is no limitation. Otherwise, $3,000 limit for claiming the loss, the capital loss. If you are a trader, you can write off full loss during the current year. If you want to know more about it, it's a good idea to discuss further after this webinar. Next strategy about real estate professional. If you have multiple real estate projects, rental properties, commercial property, you should think about making an election to consider yourself as a real estate professional. That doesn't mean that you need to have real estate license. It is just a tax election. Having a license is not mandatory. If you are actively involved in managing real estate properties, you may eligible to get this real estate professional status. This will help you to take deduction for the complete rental loss or rental deduction or depreciation on your tax return. Again, cost segregation study will maximize the depreciation. That would help you to reduce your tax liability. Kiddie tax planning, borrow loan from your kids and use that money for your investment project. You know, most of the time it's a good idea to create a family LLC. You can gift up to $18,000. Taxpayer and spouse together can gift $36,000 to your kid, and in borrow the money from your kid. That money, once you gift, belongs to your kid, and you borrow them, use in your project as a loan, and you pay the interest. So first 1,300 interest is completely tax free. You don't pay any taxes. The next 1,300 taxed at 10%. So total 2,600 will go out from your taxable income. So it's a small benefit, but it's worth doing it every year and accumulate a decent amount of money in your kid's name. You know, you can think about it and get the benefit. Next is opportunity zone. If anybody have a capital gain, invest in opportunity zone, holding it for 10 years, the complete capital gain becomes tax free. We do have opportunity zone experts. You know, if anybody interested or if anybody have huge capital gain, please do contact us. We will help you to utilize this strategy. So next is last minute. You know, so far whatever I covered, it's for, you know, you should implement it during the year or well before ending the tax year or beginning of the tax year. Now let's talk about the last minute tax planning strategies. All these strategies can be implemented in the next 1.5 month, especially for business owner. If there are any expenses, if you are paying rent for the office or any rent, some of the expenses you can pay in advance. 12 months of expenses can be paid in advance as per IRS safe harbor rule. So if you are on a paid basis method, whatever you pay for the 12 months of rent, you can able to write off as an expenses. A postpone billing customer, basically you are deferring the income to next year. If you postpone billing customer, client and patient and receive January 1st, you don't include that income in your 2024 tax return. Buy office equipment. If you have a plans of buying an office equipment, you do get good deal, especially during end of the year. And also you can able to depreciate. And some of them you can use bonus depreciation or 179 depreciation. You can able to write off maximum amount that would reduce your taxable income. Use your credit card opportunistically. So basically credit card, you don't pay immediately. You get 90 days time or 45 days time, depends on the credit card cycle. Use your credit card to buy any of your office equipment or any of your business expenses. Think about if you want to replace your car, end of the year is the good time. If you buy a car, if it is an electric vehicle, you can able to get electric vehicle credit. Also, you can able to claim depreciation. Another strategy is you can have your children to be included in the payroll. Again, you need to have a reason or you need to justify having your kids in your payroll, in your business payroll. We can give you some ideas. Your child can be productive and also you can meet the IRS guidelines. When you pay them, you can use that money for setting up the Roth IRA. It has multiple dimensions for this strategy. Please do contact us. We don't want you to make any mistake and get any questions from the IRS later. It is little sensitive, creative. Please do contact us. We will help you to implement this strategy in a correct way. For individuals, we already discussed about contributing to a retirement plan, HSA plan. You do have some of the plan have option to contribute until April 15th following year before filing the tax return. And if you need to pay any estimated taxes, pay on time. January 15th is the fourth quarter estimate tax payment. If you pay on time a proper estimated taxes, you can avoid any underpayment penalties or interest. The next is donor advisory fund. We already spoken. If anybody have income, you want to take the benefit, and if you don't know where to contribute, what charity to be given, just park it in a donor advisory fund. It can be set up very quickly. You do get the complete write-off for the contribution you make, and you can able to reduce your tax liability. So in order to implement any of the strategy, you need to know how much is your income, how much to contribute, what are your opportunities. So that's when we come in to help. We will review your return. We collect all your information, copy of payslip, year-to-date brokerage statement, and we preview your tax return. We estimate the next 1.5 months what would be the income you make. We can easily estimate based on the information you provide. We prepare the tax return in the next 1.5 weeks, and we identify the strategies. Some of the strategies we already discussed. We'll let you know these are all the opportunities you have and you can utilize. That would help you to reduce your tax liability from higher bracket to a lower bracket, and you get benefit. So this is a great initiative. Again, I'm reiterating this. Many of our clients have taken this benefit and they have seen the reduction in taxes. I request everybody to consider using this service from RightTaxMate. And let's talk about AI trend. IRS has received 80 million fund primarily for enhancing the operational efficiency and to strengthen the compliance effort. 80 million fund, we are already
billion.
seeing.
Yeah,
sorry,
you said
Raj.
80 billion. 80 billion, right? I thought I heard 80
Sorry,
million.
80 billion. Sorry, 80 billion. My bad. Thanks for correcting that. So we are already seeing the initiative by IRS. When we are talking to them, the call wait duration has significantly reduced. We can get connected to the IRS representative quicker these days. And IRS has using AI, artificial intelligence, to detect the fraud and to do a predictive analysis. This means we can expect more audit from IRS. And also there will be a scrutiny for anybody who makes more than 400K at individual level. There is a high chance of getting an audit. So it is extremely important to be proactive and understand what IRS is doing and be prepared to take care of all these check boxes and file an accurate tax returns to IRS. It's like driving a car in a highway. Earlier, there used to be policemen. If you are, violated the rules, they were giving the tickets. Now, all the sensors, cameras have been installed. There is no human intervention. If you cross the limit, you do get ticket. So similarly, IRS has implementing a lot of the AI tools in their process. If anybody deviating because they are not aware about it, or they got used to the way they were doing taxes in the prior years, so there is a high chance that they will get caught. And when they get caught, and there will be a significant amount of tax and penalties to be paid for the prior years and also for the current years. So I request to understand what are the initiative taken by IRS. When we prepare the tax return, we ensure that we are meeting all these compliance requirement by IRS. And also there are a lot of software tools are available. RightTaxMate investing on these tools. We are currently using Intuit. We personally met the Intuit development team, the directors. We are working with integrating some of the RightTaxMate applications directly with Intuit and with an IRS. That would give a better experience for our client, and also to avoid any notices from IRS. So I'll not spend too much time here because of short of time. If anybody wants to know more about this initiative, please do contact us.
So Gangaraj, just to
I'll
understand,
take a stop.
Gangaraj, just to understand, the government is using AI to what's called put better scrutiny on tax returns, and like you said, a higher number of tax returns, etc., will be now checked by AI, and automatic notices, etc., will be put out at a much higher level than it was done in the past. On the other hand, how are organizations like you going to use AI to be more productive and also to protect their clients from such audits or such mistakes that can cause penalties, etc.?
Yes, one initiative we have taken is integrating the IRS transcript services in our portal or in our process. We do get IRS transcript. Whatever IRS is reviewing or getting the information from third parties, we do get a transcript from IRS before we finalize the return. We do compare with the information provided by our client. Before IRS catching that mistake, we fix it before we file the tax return. At the same time, if we see some of the expenses or some of the credit are not taken or within the limit, we do alert the client. We let them know that there is a chance of audit because it is over and above the limit. We give them an heads up, and if there are any risk, we will capture any of the supporting document in advance. So if we get any questions from IRS, we can support them. And another side is creating the experience for our client. Using AI, we are investing on all the tools that are available, which are currently used by some of the big four. We are investing on adopting some of the best tools in our website and in our process to create better experience for our client.
Great, great. I think FBAR and this topic is also of interest to our listeners here or participants here, because many of them are from India. Could you take just 2 minutes and quickly go through that also?
Sure. FBAR and FATCA, this applicable if you have a foreign financial account outside of United States, not only in India, but anywhere outside of United States. Many of you are filing the FBAR and FATCA, but when we see the prior year tax return, if it is prepared by some other or self-prepared, we do see that there are mistakes when they file the FBAR and FATCA. We have been including this is one of the hot topic because not filing an accurate FBAR leads to significant penalties, higher penalties. It also subject to criminal prosecution. So keeping this in mind, there are some myths of FBAR, and there are only few rules. And as this cartoon represents here, you need to follow them. Otherwise it will be creating a big problem for you by the IRS if you are not following the rules. So there are some myths. We want to clear those myths and hope this will help all the clients, all of the participants today to understand this topic in a better way and to file this correctly when they are filing the tax return. One is they always claim that they were not aware about it. Is it a new law? No, it's been there from 1970 as part of Banking Secrecy Act. I have not filed FBAR all this year. Am I in a trouble? Not really. If IRS has not initiated any audit or if they have not sent any notice to fix this FBAR, you are okay. There are some programs available, amnesty program or streamline filing program. You can register in the program and clear non-compliant for all the prior year. I filed FBAR for extension, and will it be automatically extended? The answer is yes. If you filed, because there is no separate extension for FBAR. If you filed your tax return extension, the same extension applies for FBAR as well. The next myth is I will not easily get caught if I have not filed FBAR. Am I okay? In this today's world, we are all in digital industry where the IRS and the India have already signed intra-governmental agreement. The information will seamlessly shared between IRS and India. Your PAN is linked with most all the banks in the India or in other countries as well. Similar arrangement in other countries. So there is a very high chance that if you are not filed FBAR, IRS will automatically figuring it out and they may send a notice. Once they send a notice, they will come up with significant penalties, and also they may charge willful penalties, which will be much severe. So don't have an opinion or impression that you will not get caught. Again, we just spoke about AI. With the tools available, it's easy for IRS to find the mistakes and impose penalties. So if anybody not filed FBAR, please do contact us. We will help you to fix FBAR compliance for the prior year and also give you a correct education to follow it in the future year.
Yeah, I guess, Gangaraj, 1 more minute. That's all you have now.
So I think FBAR, some of the basics of FBAR, it needs to be filed by April 15th, or if you have an extension, you can file it along with the extension. You have time till October 15th. Penalties for not filing a FBAR is $10,000 per violation. If it is a willful violation, IRS has defined what is willful, what is non-willful. Most cases, especially now, IRS may consider as a willful violation, and the penalties is $100,000 or 50% of the balance you have in the account. And this penalty for every year. If you are not filed for 2 years, you may need to pay $200K for each account or 50% of the balance, whichever is higher. So that's the reason we are emphasizing more on this topic, and we don't want any of our clients to go through this situation by paying the penalty. FATCA, again, it's in addition to FBAR. If you have more than $100,000 balance end of the year in your financial account, foreign financial account, FATCA comes into picture. Again, I'll stop here. I want to spend more time on question and answer. Then we can, if anybody has a specific question, we'll get back to this FBAR topic again.
Great.
And
great.
before we open the question and answer, I just want to show our contact information. If anybody wants to contact us, you can go through our website or call us, email us, book an appointment. You can find this link in our website. Want to visit in person, our corporate office in KT. As I said earlier, we do have physical presence in Sugar Land, Cyprus, Irving, Dallas area, Seattle, and Chicago. You can meet one of our representatives to initiate the conversation.
Great, great. Folks, as you can see, we have an expert here who has tried to pack in 40 minutes, a lot of knowledge, a lot of information. And I saw many of these questions that were coming across. And luckily, we also have some of Gangaraj associates who are actually responding to those questions in real time. So there really doesn't look like any of these questions have gone unanswered. That's good news because Gangaraj's team is responding to them right away. So Gangaraj, I think first of all, I want to thank you very much for taking the time and for my request, trying rather than educating all about the tax laws and getting into the weeds, specifically focusing on, towards the year end, what people should be thinking of. And also you have given us input into, as the new year is starting, those 10 bullets that you shared are things you should start planning, for whether it is for your children, a Roth IRA, for putting them on payroll, et cetera, et cetera. So there are some very good strategies. Some you can deploy now and save taxes. Some you can start fresh with 2025 around the corner. So I want to thank you very much. Folks, we did not want to take, we did not want to take too much of your time on a Tuesday evening. That's why we try to keep it to just 1 hour. But at this point, I'm going to actually ask Raghvendra. Raghvendra, I believe you are a panelist and you should be able to speak, right?
Hi, Raj. Yes.
Very wonderful. So Raghvendra, right now, he actually is part of Gangaraj team and he's based in Irving, Texas, right here in Dallas area. I know him well. He does our taxes also. And he's been answering many of these questions. So rather than you telling me the question in chat and then me asking Gangaraj, are there any specific questions, Raghvendra, that you would like, that somebody has asked, which you need to post to Gangaraj?
So I don't see, Raj, anything been answered. So there are a couple of questions where we need in-person contact. I noted down those questions where we will reach out. So One question I want to bring it here is, the question is raised by Abhishek Agarwal. So the question is like, I moved to US 2 years ago and working on visa. What are the tax benefits I can avail apart from the usual ones, such as traditional 401k, backdoor Roth IRA? So also said, my friend was suggesting that opening an LLC can help in saving taxes even for W-2 employees. Can you provide more details on this?
Yeah, Abhishek, we need to review your income, how much income you have, what is your marginal tax rate. Also need to collect some of your family information, whether you eligible for any kind of LLC setup, and also we need to keep your immigration status in mind. What's your current status and what's your plan of getting EAD? Those kind of information is required. We want to set up a one-on-one meeting to know all of them and suggest the strategies that can be implemented.
Wonderful.
Okay. So there is a other question from Vishal. The question is like, is there any minimum or maximum balance in India bank accounts? I don't need to file FBAR.
Yeah, if the aggregate value of your account is less than $10,000, you don't need to file FBAR. The keyword is aggregate value and anytime during the year. If you have two accounts, one account has $6,000, other account has $5,000. If you combine at any time during the year, you need to treat individually and you need to pick the highest value each of the account. If the total value of your account less than $10,000, then you don't need to file FBAR. If the total balance, even one day exceeded $10,000, you must file FBAR. And this account includes not only your saving account or current account or FD, it also includes your brokerage account, life insurance policy, cash value of life insurance policy, your public provident fund. So it has a higher scope. So you need to be careful in calculating the highest balance or aggregate balance.
Great, great. There are several questions about DAF. People want to learn more about donor advised funds. So do you want to just take a minute and just reiterate the benefit of DAF, Gangaraju?
Yeah, donor advisory fund. These are all IRS approved donor advisory fund. Basically, if you contribute to a donor advisory fund, you can able to itemize, deduct as a charitable deduction, qualified charitable deduction on your return. There is a income limitation. Based on your limitation, we can suggest you what would be the maximum amount of contribution you can make. Again, we need to know your basic information and come up with the donor advisory fund calculations. So contact us, we will provide you more information about it.
Yeah, I'd like to just add to that, what we had said earlier. If you don't know which charity to donate in the next 6 weeks before the year end, but if you would like to donate a certain amount, DAF is the way to go. You can park your money in the donor advised fund and then later on decide which charity to give it to. Secondly, if you have capital gains, if you have an appreciated stock, for example, rather than selling it and taking capital gain taxes or paying capital gain tax on it, you could actually donate the stock itself to your donor advisory fund. So the entire amount will be in the donor advisory fund, which then can be donated. So let's say somebody had $50,000 and the capital it appreciated to $100,000. So when you move that the entire stock to the donor advised fund, your donor advised fund will have the entire $100,000, which you then can turn around and donate to charity of your choice. And Gangaraj, if a appreciated stock of, let's say, like the example that I mentioned, $50,000 that has grown to $100,000, if $100,000 is moved to the donor advised fund, will the person have opportunity to deduct entire $100,000?
Yes, we always look at what is the fair market value of the stock at the time of donation. We don't see how much you paid to purchase the stock. We always look at the fair market value on the date of donation, and you get the deduction based on the fair market value. So you don't pay tax on the capital gain. The entire amount given to the donor advisory fund will be used for charitable deduction.
Yeah, it's a great vehicle. I think people who can should take advantage of that.
Yes.
Okay, any other questions? Anybody? Wow, this is fantastic. We are on top of the game. Raghavendra, any other question that has come in since the last response?
Yes. There is a question from Vaibhav. Do mutual funds investments in India count towards FBAR?
Yes. Mutual fund considered as a financial institution, investment in financial institution, they do come under FBAR. Also, mutual fund for IRS purpose considered as a PFIC, passive foreign investment company. There are additional compliance requirement for if you are investing in a mutual fund. So contact us. We will educate more on treatment of mutual fund on your US tax return.
Now, right now, it's going to become busy time of the year also for a lot of people. So one of the question was, how can they set up one-on-one appointment with you, with your organization, Gangaraju, Raghavendra?
Yeah, if you visit our website, RightTaxMate.com, there is a option to book an appointment. You can book an appointment. One of our representative or myself, depends on the question. One of our representative or myself will be available to set up the one-on-one consultation.
May I ask a question?
Yeah, sure. And just one topic, if somebody wants to quickly contact us, you can also send an email to tax@righttaxmate.com, and we will contact you, respond with our answer, and set up an appointment. Sorry, Anna, you can
No problem.
proceed.
So you mentioned the possibility of increased tariffs.
Yeah.
A lot of people of Indian origin are in the services business.
Yes.
So would the tariff also apply to people who have maybe a offshore resourcing business? The services.
Those tariff which are in proposal, more information yet to come, and they are talking about the product, just to encourage the domestic production.
Manufacturing.
Not for the service, but we do get more information very soon. It is mainly Trump's agenda is Make in America. So whatever they do, they want to encourage for the domestic
Got
production.
it. Thank you.
Yeah. So
this is probably the right time. It's 9 o'clock, and I really, what's called, thank everyone who has joined today's WeGyan session, and hats off to Gangaraju, because Gangaraju, by the way, for everybody's benefit, he's actually dialing in from India. He's there with his family, but he has offered to do this webinar while in India. So his commitment, his dedication is clearly coming through besides his expertise. So he is 75 strong organization. So his colleagues are on the standby if anybody wants to connect with them for a free inquiry. Just get the ball rolling. If you have a question, they are very good people, warm, ready to answer. And if it's going to get complicated, they'll let you know ahead of time, if that's going to cost you or what. But you will enjoy the whole experience with them. So with
thank
that,
you,
I
Raj.
want.
I'm traveling tonight. So if
Okay,
anybody wants to meet me, probably after 2-3 days, I'll be available in KT office. We can meet in person.
you'll be back on the state side. Wonderful, wonderful.
Yeah.
We will continue to bring quarterly webinars like this on emerging topics, folks. So after later this week, you can expect a feedback form that will be sent to you. In that feedback form, we'll also send you link to this recording of today's session, because several people asked about the PowerPoint slides, but PowerPoint slides by itself really doesn't add any value. So this webinar, the entire webinar has been recorded, and you will have access to the slides, plus the conversation, plus the points that were made by Gangaraju. So I think that will be of value. So expect to receive that in the email. Also, there will be a feedback form. We request you to complete the feedback form